Tesla CEO Elon Musk taking aim at the SEC in a recent tweet. Here it is. Just want to say that the Short Seller Enrichment Commission is doing incredible work, and a name change is so on point. Joining us now, former SEC attorney Teresa Goody. All right, Teresa, these taunting tweets, could they backfire on Elon Musk?
I think they already have to some extent because, first of all, you very rarely get what you want from the government by mocking it and calling it names. But also his tweets, like his prior tweets, have shown us that he has a fundamental lack of understanding of the way the real world works. And he fails to appreciate, still at this point, the problematic nature of his conduct, which means that these penalties, as severe as they may be, are probably unlikely to deter him from future violations.
Right.
And so I think that the SEC and the DOJ and the judge who still has to approve this are going to look at this kind of conduct as showing somebody who really fails to appreciate the wrongfulness of his conduct and will likely continue to violate the laws.
Well, some would argue, though, Teresa, that these aren't really biting punishment. It's certainly $20 million. I think he could afford that. He's still on as the CEO of the company. From his vantage point, he may say, listen, someone's got to push back because the Securities and Exchange Commission does nothing as short sellers run amok. If you're a small company, a small publicly traded company, you're always at their mercy. They can destroy a company overnight, and they've taken on large companies and have had pretty good success there. Is there a voice for companies, publicly traded companies, to push back against a system where these shorts sometimes can do almost anything to destroy their company?
Well, there's one thing to talk about whether or not he thinks short should be something that's lawful or not. But it's another thing is what his conduct did. And he actually is alleged to have violated, or I'm sorry, to have injured innocent investors, people who actually believed his tweets, who thought, okay, if I buy this stock now at less than $420 a share, he's going to buy my share at $420. This case is not just about short sellers. This goes to the very fundamental reason why the Securities and Exchange Commission was created and these laws were created in the first place. I mean, this is very reminiscent of the 20s when people would make these comments and they would lie about their stock. They'd lie about the company. And this is exactly what he did, and it's causing chaos to the market. This conduct is exactly the reason we have the securities laws and the disclosure regime, and he's not taking them seriously at all and fails to appreciate them at all. And so, yes, there is an argument for short sellers, and if somebody wants to bet against your company, they can do that right now. But that's not what this case is solely about.
Right. I got you. Great points, by the way. And I don't know that the $20 million was enough of a deterrent, perhaps, but we really appreciate you coming in and explaining it. Thank you.
Thank you.